It is the 26th of September 2022. My name is David Hickson, and in today's market update we're going to be taking a look at the S&P 500. We're going to take a step back and remind ourselves what is happening so that we have an understanding of the bigger picture to the US markets and indeed stock markets around the world. Let's start by taking a look at this analysis, which is one that we've been tracking for many months. And here is the bigger picture. This is an analysis based on the default nominal model. Now, if you don't know what a nominal model is, I would encourage you to download the 10 core concepts document that I will provide a link to in the description below this video. The nominal model is simply a list of cycles that Hurst discovered in his research over 50 years ago. And in this analysis, you can see that we have a 9-year cycle trough over here in 2009, and the next 9-year cycle trough occurred in March of 2020, a trough that I sometimes refer to as the pandemic trough, because that is, of course, when the pandemic was sweeping around the world. And so it is possible that that trough was a little distorted because of news events at the time. However, according to this analysis, that is where the 9-year cycle trough has been positioned. And since then, we have experienced one 18-month cycle. That is this yellow-colored cycle over here. These semicircles provide a useful way of visualizing the diamond notation, which marks the position of the troughs at the foot of the chart. We are now in our second 18-month cycle, as you can see over there. That second 18-month cycle is expected to form a trough in early 2023. And then, of course, we will have our third 18-month cycle to bring us into the next 54-month cycle trough expected at the moment in about 2025. Now let's take a look at the other analysis that we have been tracking. This is an analysis that I have been mentioning over several market update videos. This is a different nominal model. What happens is that we perform a spectral analysis at the beginning of every analysis that Sentient Trader performs, and Hurst recommended that we build what he called an initial cyclic model on the basis of the results of that analysis. In Sentient Trader software, we can ask Sentient Trader to favor the initial cyclic model in the analysis and to work with slightly different cycle lengths. This is the result of this analysis, and if you take a look at the bottom right-hand corner of the chart, you can see different cycle lengths to the nominal model that Hurst defined 50 years ago. For instance, the 9-year cycle is a little less than 7 years long. The 54-month cycle is only 43.5 months long, and so forth. The cycle model has the same structure. In other words, there are still 3 18-month cycles in every 54-month cycle. You might wonder why I continue to call the 18-month cycle an 18-month cycle, seeing as I have just pointed out that the cycle wavelengths are shorter. The reason for that is because it is a lot easier to give a cycle one particular name and accept the fact that it might have a slightly different wavelength. It means that we're all speaking the same language, as it were, and so I continue to refer to these red-colored cycles as the 9-year cycle, even though we know that the actual wavelength discovered in this analysis is a little shorter than 7 years. The point is, it is that cycle in the structure of cycles in the nominal model. I hope that makes sense. And so, according to this analysis, we had a 9-year cycle trough over here at the beginning of 2009, just as we did in the other analysis. But the next 9-year cycle trough was in early 2016, as you can see over here. And in this analysis, the pandemic trough of March 2020 was of only 54-month magnitude. And so the result of this analysis is that we are in a slightly different situation. As you can see at the foot of this chart, we experienced one 18-month cycle and then a second 18-month cycle, and we are now actually in the third and final 18-month cycle of the current 54-month cycle. Let's zoom in and take a look at what that implies. At this zoom scale, I turn off the semicircles because they can get a little messy on the chart. Here we go. So here is the 54-month cycle trough of March 2020. Here is the first 18-month cycle. So that was one 18-month cycle. And that 18-month cycle, according to this analysis, completed in May of 2021. The second 18-month cycle was the recent trough over here, or I should say the 18-month cycle completed at the recent 18-month trough in the middle of June. That means, as mentioned, that we are now in our third 18-month cycle. Let me display the semicircles again quickly just to help visualize that. There are our three 18-month cycle semicircles, and you can see the current 18-month cycle is expected to come down into a trough in about the middle, perhaps late next year. And that trough, of course, will also be a trough of the 54-month cycle and a trough of the 9-year cycle, according to this analysis. If we take a look at a composite model line based on cycles only from the 40-week cycle and longer, you can see that the general implication is that price is now bouncing out of, or I should say has been bouncing out of, an 18-month cycle trough, is then going to turn down into a 40-week cycle trough expected early next year. Then we will get a bounce and then another move down into the big 9-year cycle trough expected towards the end or in the latter part of next year. So that is the bigger picture according to this analysis. Let's switch back to the first analysis we were looking at and consider the same bigger picture in that analysis. So here, of course, we have the 9-year cycle trough as mentioned in March of 2020. We had our first 18-month cycle, which completed in October of last year. We are now in our second 18-month cycle, and then we have a third 18-month cycle bringing us into the next 54-month cycle trough in only 2025. So in terms of what's happening now, the big difference with this analysis is that the trough in June of this year is phased as a trough of 40-week magnitude as opposed to 18-month magnitude that we saw in the other analysis. If we display the composite model line, you can see the implications of this analysis are that prices bouncing out of a 40-week cycle trough in the middle of June, then turning down and about to form a trough of 20-week magnitude. Then it is going to bounce out of that cycle trough and then come down into a trough early next year. The difference between this analysis and the previous one we were looking at is that that trough early next year is going to be an 18-month cycle trough, in other words, a more important trough, and so we will see a bigger bounce out of that trough. And then, of course, price will come down into the next 18-month and also 54-month cycle trough towards the end of 2024. And so the structure of the move is similar in both analyses. That is the really important point that I want to make. We are expecting a trough early next year in both analyses. The question is, what is going to be the magnitude of that trough? Is that trough early next year going to be an 18-month cycle trough, indicating that price must, of course, move fairly swiftly down into the 18-month cycle trough and then bounce out of it? Or is it going to be a trough of 40-week magnitude, giving us a little less of a move down and a smaller bounce out of it, with the bigger trough following later next year? The way that we will determine which of these analyses is actually the one that is playing out is by watching very carefully what price does as it forms each of these cycle shapes. Let's start with this analysis and zoom in and take a look at what is happening now. According to this analysis, as mentioned, we have the 18-month cycle trough over here in the middle of June. This analysis has a straddled 80-day cycle trough over here, which I spoke about several weeks ago in the market update video, where we considered the possibility that the 80-day cycle was going to turn out to be a straddled one. A straddled trough is when a cycle trough occurs, but it is not very evident in the price action. As you can see, what is happening here is the price is now moving down into a 20-week cycle trough. Displaying the composite model line here shows that the 20-week cycle trough is, of course, expected round about now. An interesting thing is happening, however, between the composite model line and price, and that is that price has dropped down a lot further than would be expected by the composite model line. Remember that the composite model line takes the information in the analysis, recomposes it, and shows us what should have happened if the only thing influencing price were the cycles found in the analysis. The fact that price has dropped below the composite model line indicates that there is more bearishness than would be expected according to this analysis, which brings us back to the other analysis we are looking at, which is, of course, a more bearish one. This analysis might be more bearish by expecting price to come down into a 54-month cycle trough next year. However, the past few months, according to this analysis, should have been a little more bullish because of the fact that we have an 18-month cycle trough over here in June. This has been a fairly mixed 20-week cycle in that it has not been a very bullish cycle or a particularly bearish cycle. The peak is in about the midpoint. It's perhaps a little after the midpoint, indicating slight bullishness, and depending on where this trough forms, and of course price must still come down and form the trough, it has not yet proved to be a very bearish cycle. However, the first 20-week cycle of an 18-month cycle should be a little more bullish than the cycle shape that we have seen. How will we know when this 20-week cycle trough has formed? A very useful way to confirm cycle troughs is to take a look at the valid trend line, the VTL tool defined by Hurst. Valid trend lines are simply trend lines that connect troughs or peaks and obey certain rules according to the cycle analysis. This is a 20-day VTL, and when price crosses up above this 20-day VTL, that would confirm that a trough of 40-day magnitude has formed in the market. If a 40-day cycle trough is confirmed by price crossing above this 20-day VTL, then it will be apparent that the 20-week cycle trough has also formed by the principle of synchronicity. Now let's take a look at our other analysis and consider the possibilities there. This is an analysis that I haven't influenced apart from suggesting to Sentient Trader that the trough in the middle of June should be a 40-week cycle trough. An interesting thing has happened over here. This is the circle and the whiskers for the 80-day cycle trough. The circle, of course, indicates the time that we expect the next 80-day cycle trough to form in the market on the basis of the recent wavelength of that cycle. Now, you can see that the software has positioned a 20-day cycle trough beneath that point over there in the 3rd week of August. And directly above that 20-day cycle trough are the 40-day and the 80-day circles and whiskers. That is a really interesting situation. Sentient Trader doesn't want to position the 80-day cycle trough there because it doesn't find enough evidence in this price action to position that 80-day cycle trough. But looking at this analysis situation, it is fairly apparent that the 80-day cycle trough must have occurred. Look at the right-hand edge of the 80-day cycle whisker. You can see that that was 3 weeks ago. In other words, the reasonable period of time in which an 80-day cycle trough should have occurred came to an end 3 weeks ago. So the 80-day cycle trough should have formed in this market, but it has been difficult to define exactly where it was. Here is the nest of lows for the next 40-day cycle, and so it is quite possible that price has formed the 80-day cycle, although we haven't yet, according to this analysis, actually been able to position it, but it is now coming down into the next 40-day cycle, and here is the nest of lows for the 20-week cycle, and so price has come down, should bounce out of a 40-day cycle trough, and then come down further into the 20-week cycle trough. That is a big difference between this analysis and the other one we were looking at a moment ago, which expects the 20-week cycle trough to occur about now. This is an interesting bar count over here. 101 days have elapsed since the 40-week cycle trough in the middle of June. 101 days or 102 days is an interesting number because of the default nominal model discovered by Hurst 50 years ago, which tells us that the average length of an 80-day cycle is in fact 68 days, and the average length of a 40-day cycle is 34. If you don't understand why those average lengths are not the exact number of the name that we use for the cycle, I would encourage you again to take a look at that 10 core concepts document. If we add those two numbers up, we get, of course, a total of 102 days. And so we do often see troughs forming at 102 days after a prominent trough. Usually when that happens, it is not a very late 80-day cycle or an early 20-week cycle, but it is in fact the 40-day cycle that occurs between those two cycles. And so it wouldn't surprise me to see price bouncing out of what is probably going to be a 40-day cycle trough. As a matter of interest, if we display the composite model line for this analysis, you can see that it has recently diverged greatly from the price action. The reason for that is very simply that Sentient Trader has not yet been able to position the 80-day cycle trough. This is a circle and whiskers and not actually a diamond marker. And so for that reason, Sentient Trader is saying this 80-day cycle trough is really overdue and it must be turning up really soon. And that is what that composite model line is doing, whereas price has, of course, been dropping down below it. That is a fairly clear indication that there is a problem in this analysis. And that problem is the fact that the 80-day cycle trough has not been found. We can, of course, influence the analysis in Sentient Trader. Let's take a look at an analysis that I have influenced and suggested that the 80-day cycle trough was this straddled trough position that I spoke about many weeks ago in the market update video around about the beginning of August. Here is that analysis, and there is the pin symbol indicating that I've influenced the analysis to position the 80-day cycle trough in this position over here, which would make it a straddled trough, not a very visually evident trough in the price action. I've also influenced the analysis to position the 40-day cycle trough over here because I think that is a very likely position for that 40-day cycle trough. That means that this price action over here is bringing price down into the 20-week cycle trough. So again, we need to be standing by for the possibility that the 20-week cycle is about to form. I should point out, sometimes when I say that a trough is about to form, people assume that I mean the price is about to turn up or is going to instantly turn up. Price must, of course, move down into a trough. So when in Hurst cycle terms we say that a trough is expected now, we mean that price is probably going to move down into that trough before turning around and bouncing out of it. If we take a look at the composite model line on the basis of this analysis, you can see that it matches the price action much more closely. If anything, price has been more bearish than the composite model line would have expected, indicating that the markets might well be rolling over and beginning to pull price down into the next 18-month cycle trough that we're expecting early next year. There is another possibility in terms of positioning this 80-day cycle trough that has been very vexing in the current market, and that is to position it in early September. Here is an analysis that shows that possibility. You can see that I have again influenced the analysis and pinned that 80-day cycle trough to the first week of September. However, that results in a very long 80-day cycle, as you can see. 82 days instead of the average length of 68 days, and the recent average of the 80-day cycle, you can see, according to this analysis, has been 69.5 days, fairly close to the average length discovered by Hurst 50 years ago. And so a cycle wavelength of 82 days is fairly long for that 80-day cycle. I would tend to favor the other option, which has a straddled 80-day cycle trough over here in early August. However, this is a possible analysis. It's not quite so neat in my opinion, but this would indicate that we are coming down into a 20-day cycle trough. Then we would have another 40-day cycle trough before the 20-week cycle trough forms. This kind of relationship between the nests of lows, between the 40-day cycle trough and the 20-week cycle trough, is one that indicates some confusion in the analysis, perhaps. And in this kind of situation, I would not be surprised to see the 20-week cycle trough actually form over here. I've drawn over that chart, you can't really see very much. I wouldn't be surprised to see the 20-week cycle trough form where the 20-week circle and whisker are over this 40-day cycle trough, which would of course bring into question the position of this 80-day cycle trough. And so to summarize what is happening in the S&P 500 and in many other stock markets around the world, price has been bouncing out of a trough in middle of June. It is now moving down into a 20-week cycle trough. It is then expected to give us a bit of a bounce and then a move down into early next year. According to this analysis, that will be an 18-month cycle trough, and so we could witness a fairly bearish price action over the next 20 weeks. And according to the other analysis we were looking at, that would only be a 40-week cycle trough occurring early next year, but then there would of course be an even greater cycle trough occurring after that. I do hope that you found this market update useful and interesting. If you have any questions, please join us on our Hurst Cycles Discord server. I will put a link to that in the description below this video, or you can of course ask questions below this video.